Today, we're diving into a concerning trend emerging from China's financial sector: growing friction, and sometimes outright conflict over access to personal bank accounts. We're seeing an increasing number of reports, like one from a user on April 15th, detailing significant difficulties withdrawing their own deposits. In this specific case, at the Bank of China, the individual faced repeated questioning from staff demanding verification of their occupation and the intended purpose of the funds. The customer's reported response essentially unemployed, and to spend it wasn't deemed sufficient. The situation escalated, reportedly culminating in the police being called and the customer being escorted away for cooperation or further questioning. This isn't just an isolated incident. It points to a broader pattern of systemic friction between customers and bank personnel across China regarding complex withdrawal procedures and access restrictions. So, what's behind this? A major contributing factor appears to be newly enforced, stringent anti-money laundering regulations. Under these rules, banks have been granted increased authority and perhaps pressure to preemptively freeze accounts exhibiting unclear fund flows or lacking clear provenance. What this means for the average person is potentially facing an onerous burden of proof simply to access their savings. Customers may be required to provide substantiating documentation like employment contracts, salary slips, or receipts justifying large transactions to explain their financial activity and get their accounts unfrozen. In some extreme reported instances, the process has become so convoluted that individuals allegedly need to seek pre-authorization or file an application with local police authorities before the bank will even release their funds. This situation highlights a significant tension between legitimate efforts to combat illicit financial activity and the fundamental ability of citizens to access their legally earned money. It's creating considerable hardship and public discontent, raising questions about the practical implementation of these broad financial regulations.